every Tuesday, I go live on YouTube, Facebook, and LinkedIn, giving you everything you need to start and grow a six-figure bookkeeping business. So depending on what channel you're watching me on, whether that's YouTube, LinkedIn, or Facebook, you're going to want to make sure you subscribe to my YouTube channel, join my Facebook group, and connect with me on LinkedIn. Links are in the video description below. So we've got lots of great content coming out, and especially once the new year hits, we've got lots of great stuff planned. So you want to be part of that. Okay, so I want to give you all the information you need to get started. So today I'm going to talk about taxes, right? Taxes, I'm sure when I bring up the word taxes, that's got some mixed emotions, maybe some negative connotations, but I'm going to look at the positives. Okay, there are a lot of positives and a lot of opportunities when it comes to saving money on taxes when you have not just a bookkeeping business, but a business in general. Okay, so we're going to be talking about that today. So again, I'll be live for, I don't know, half hour, 45 minutes or so, but you are welcome to drop your questions into the chat or into the comments, and I will answer those as I go. Okay, so we're approaching the end of the year, and that means we're getting into tax time. Demand for bookkeepers is always strongest right around tax time. So right now it's really, really hot out there in terms of demand. So if you've been thinking about starting a bookkeeping business, now is a great time. If you've already got a bookkeeping business, it's time to really double down and make sure your marketing is dialed in because people are reaching out. Okay, big time. All right. So what happens is one of the main reasons for that is because business owners spend most of the year, all they do is try to grow their business and operate their business, and they typically leave their bookkeeping behind, and they're not staying up on it. And so what happens is, as the end of the year approaches, there are some tax saving opportunities that you can take advantage of, but your books have to be in order. You've got to know some of your numbers in order to take advantage of some of these opportunities. Okay, so there's a big scramble there, and then as we get into the new year, well, taxes have to be prepared, and if the books are a mess, then the CPA or their tax preparer is going to have a problem with that. And they're going to either charge them a bunch of money to get them all caught up and cleaned up, or they've got to go find someone else to do it. And that's why demand is so high right now. So a lot of it has to do with taxes. But I want to talk about how taxes impact us as business owners and how it works, how taxes work when you start a bookkeeping business, and then what kind of opportunities are out there for us to save money on taxes. If you've ever thought, boy, there's all these rich people out there, these wealthy people, they take advantage of all these loopholes that just aren't available to us. I've got news for you. You've got all kinds of opportunities that you can take advantage of, things that people who've been in business a long time and even tax people just aren't aware of. Okay, so I'm going to give you a few of those today, and I'm going to also talk about why, as a business owner, if you're doing your own taxes, you are making a big mistake. Okay. I don't do my own taxes. I'm a CPA. I don't do my own taxes. Okay. There's a really good reason for that. We'll get into that. If you are a business owner and you're doing your own taxes, well, I'll be gentle and just say you're making a big mistake. I'd like to use stronger language than that, but that's just how important it is. We'll talk about that as well. So, hey, Taylor. Looks like Taylor on LinkedIn. I've been self-employed for over 5 years now, but it's always great to listen to other perspectives. So yeah, we'll dive into a little bit about what it looks like when you start your business and how taxes play into that. So let's start where most people start. Okay, most people, they start a bookkeeping business coming from a full-time job. Okay, so whether you start the bookkeeping business on the side or you just make the change, you just jump from working as an employee, getting a W-2 to owning a bookkeeping business. That's typically the how it works. Somebody comes from a W-2. So what happens is when you're a W-2 employee, you pay taxes throughout the year. Every paycheck, every 2 weeks, or however often you get paid, the IRS takes money out of your taxes. Well, your employer takes it out of your paycheck and sends it to the IRS. So they take money as the year goes by, and that's what the IRS wants. And when I say IRS, I mean IRS and the state, okay? Because they both take taxes, right? Why not? And so they're going to get that money throughout the year, and that's what they want. They don't want you to not pay taxes all year and then just pay it when you file your tax return in April. Because what happens is now they're missing out on all that interest that they could make on that money if they were to get it earlier. Okay, so they want you to pay that as you go. And that's what happens when you are an employee. Okay, every 2 weeks, that money gets taken out of your paycheck and it goes to the taxing authorities. Okay, so when you're a business owner, the taxing authorities want the same thing. Okay. They want you to pay taxes throughout the year. And so you do that in the form of, since, well, we'll talk about paychecks, because when you own a business, you can also take a paycheck depending on your business structure, but quarterly tax payments. Okay. So every quarter you make what's called an estimated tax payment. Okay. And you do that all 4 quarters. And then hopefully and ideally, when April comes around, it's time to file your taxes, you don't really owe, or you don't get a whole lot of refund. Okay. So you're kind of even Steven. Okay. Is kind of what ideally both the taxing authority and honestly you should want is that you're not overpaying or underpaying your taxes. Okay. So what happens is the first year you're in business, you're not really subject to estimated taxes. Okay, because estimated taxes, that's something that when your tax preparer prepares your first tax return for your business, there'll be a schedule of your quarterly taxes that you have to pay. Okay, and then you'll just make those payments that second year. Okay, there will be a schedule provided to you based on what you owed the first year. Okay, that's what that's based off of. And so if it's your first year in business, you don't have a prior year to base estimates off of. So what happens that first year, you really don't make any estimated payments. Okay. And again, this is whether or not you still have a full-time job. So as your business makes money throughout, let's say it's 2022. If your business has made money throughout 2022, and this is your first year in business, you're not really making those estimated tax payments. You're not. But at the end of the year, if your business has made a profit, you will need to pay tax on that profit. Okay. You'll have to pay tax on that profit when your tax return is due in April. Okay. And then at that time, you will now for 2023 have estimated quarterly tax payments that you'll need to make based on what you made in 2022. Okay. And now things get things can get more in depth, but I'm just going to go over the broad strokes here for you on how these things work. So most people get their businesses started as like a sole proprietorship or an LLC, a single member LLC. And if you do that, what typically happens is you file just a personal tax return, and then there's an extra form that you fill out to report your business activity, income and expenses. Okay. And that's called a Schedule C. Okay. So that's what'll happen. In April, you'll file your tax return with a Schedule C, April of 2023. It will report your profit on your bookkeeping business. And then you will have quarterly tax payments based off that profit. They'll kind of divide it by 4, and you'll just owe payments throughout the year of 2023. And again, that's all goes back to this fact that the IRS now isn't being made aware of what you're making. Okay. When you're an employee, they see the payroll numbers come through. Okay. But for all the IRS knows, throughout 2022, maybe you didn't make anything. Okay, you made nothing. You're just getting your business started, or you had a lot of expenses, whatever the case may be. The IRS doesn't know that. They don't know if you made nothing or that you made a lot. And so what they don't want you to do is make a ton of money throughout the year and then just pay one lump sum in April. Okay, they want their money throughout the year, starting with year 2. Okay, they want that money throughout the year. So that's how taxes kind of work in terms of estimated tax payments, and that's how you'll pay taxes throughout the year. Okay, as a business owner. And this is whether you own a bookkeeping business or any other type of business. Okay, so that's how you will pay taxes. And again, you only pay taxes based on your profit. Okay, whatever profit you've made in the business. Okay, and so those quarterly payments start in year 2. Okay, so if 2022 was your first year in business, you'll owe tax money. I hope you didn't just go out and spend all of your profit on your bookkeeping business, because guess what? That profit's going to be taxed. You're going to need to pay tax on that in April. Okay. But then starting next year, if 2023 is your second year in business, you're going to make estimated tax payments, and whoever prepares your taxes will give you that schedule. Okay, they will give you that schedule. So that's pretty much how it works, in terms of like I get a lot of questions where it's like, okay, I'm going to start a business, but how do taxes play into this? Okay. The next thing I'll just touch real briefly on is once you earn around $30,000 per year in profit, it really makes sense to but to form an S corp. Okay, so you take your LLC that maybe you had before, and you elect S corp status. Okay, now you're taxed as a corporation in the eyes of the IRS and the state, and there's a lot of tax savings there. Okay, you can save a lot of money on taxes just by electing to be an S corp. And once you're an S corp, not only do you take distributions from the profit of your business, but you're also required to take a paycheck. Okay, so now you got two things happening there. You're taking your owner's draws. Okay, you're just taking money out of the business. You can think about that as taking your share of the profits, but then the IRS wants you to take a salary. Okay, and I won't go too deep into it because there's a whole lot of math behind what's a good salary and how much should you take and things like that. But on the salary portion of it, you'll be paying your taxes, but you still need to pay taxes on the profit portion. Okay, so that's going to factor into your quarterly taxes. Again, I'm going to talk about this a little bit later, but this is why if you're doing your own taxes, you're making a huge mistake. Okay, because the right advice when it comes to S corps and payroll and all those types of things will save you far more money in taxes than you pay somebody, a tax professional. Okay, so we'll get into that a little bit later. I've got very strong feelings about that. Okay, as a CPA who doesn't even do my own taxes. All right, if you're using TurboTax because you think, hey, I'm doing a good job and I'm saving money, doing my own taxes, that's something that needs to stop. That's something that needs to stop, and we're going to talk a little bit more about that. So let's jump into a few questions. Hey, Taylor, good to see you from San Luis Obispo. Good to see you, Taylor. Your booking business right now is on the side of your full-time job. That's how most people start. Henry, just started my bookkeeping business in October. How would I figure out my quarterly payments? Again, Henry, you won't have to worry about quarterly payments until next year. Okay. If you make profit this year, make sure you set a little bit aside, depending on your tax rate, 25%, whatever you want to use. Set aside a little bit of that to pay that tax in April. But in 2023, when you get your tax return prepared, you'll have the quarterly payments and you can make those in 2023. Okay. Hey, Jesse, just getting started. Awesome. Great to have you. Great to have you. So again, as we go through things, feel free to ask questions. Okay. Ask questions as we go along here. So I basically now want to jump into kind of the exciting side of this conversation in here in the second half of the conversation, which is why starting a bookkeeping business allows you, or any business, allows you all kinds of tax savings opportunities. And then this is going to dovetail into our conversation about why you need a professional doing your taxes as opposed to trying to do them on your own as a business owner. Okay. So there are all kinds of opportunities to save money on taxes, to lower your tax liability. I'm going to talk about three of them just to kind of give you a little taste. But the truth is, you hear, Amazon not paying any taxes and like all these different companies and wealthy people not paying anything on their, taxes, or they're paying a really tiny tax rate. And that's all because they're just taking advantage of the tax code. And when I say take advantage of it, I don't mean that they're doing anything wrong. It's written in such a way that if you know certain things, you can save a lot of money on your taxes. Okay. And so we're going to talk about three ways. Okay. Three ways that you can, like, specific things you can do as a business owner to save money on taxes. And before I get into that, I should mention that when we talk about saving money on taxes, we're really talking about two things. Okay. Number one, ideally, we'd like to just pay as little in tax today as possible, period, end of story. Okay. But the bigger conversation where a lot of the opportunities lie are in tax deferral. Okay. Maybe not paying the tax today, maybe paying it down the road, a year down the road, 20 years down the road, or longer. Okay. Because what happens is if we owe, or if we, let's just take, $100. If we owe $100 in tax, would we rather pay that today, or would we rather pay that in 20 years? Well, if you look at the time value of money, which is basically like, hey, if I don't have to pay that for 20 years, I'd rather take the $100 now, invest it, get a bunch of interest income, and then 20 years I'll pay the 100 and I'll have all that interest income on top of that. We want to defer taxes. So that's kind of the bigger strategy here, is deferring taxes, not like not paying them, but paying them as late as possible. That is a huge benefit when it comes to this time value of money concept, because we could be doing things with that money today instead of paying taxes with it. Let's pay taxes down the road. In fact, down the road, hey, maybe our tax rate will be lower, we'll be older, maybe we won't have a lot of income, and so that tax rate will be based on our, what kind of income we're making, and so maybe that $100 won't even be $100 that we owe. So it's tax deferral is a really big piece of this. So keep those two things in mind. There are some things that you can do that are just like flipping a switch, where you can just lower your taxes, period, today, end of story. Forming an S corp when you're making over 30K in profit a year is one of those. Okay. But the tax code is not littered with all of these different, like, oh, you just have to flip these little switches and do these little things, and all of a sudden tax disappears. There's typically structures that need to be set up, things that need to be done in order to defer those taxes. Okay, so tax deferral is a big one. But let's talk about some of these things. I talked about an S corp already. I'll talk about three more. So Andrew, you're asking, so if you profit more than 30,000, you should set up an S corp. Generally speaking, yeah, and the reason is, once when you have an S corp, now you and the business are different. Okay, you and the business, when you're a sole proprietorship, and even when you're an LLC, in the eyes of the tax code, you're kind of this. You and the business are kind of the same thing when it comes to taxes. Okay. When you form an S corp, you're separate. When you're an LLC, you're separate as well. But in the eyes of the taxes, when you're an S corp, you're separate. Now you're not just filing that Schedule C on your personal tax return. You are now filing a separate tax return for your business, a completely different tax return for your business. Okay. So there are tax preparation fees that you have to pay for. When you're an S corp, you have to pay yourself a payroll. So there's payroll fees you got to pay for. And then in a lot of states, there's a minimum tax that you have to pay when you're an S corp. Okay, when you're if you're a sole proprietorship here in California, you don't have to pay anything every year when it comes to like a what's called a franchise tax. When you're an S corp, every year, whether you make money or not, you have to pay a minimum of $800. Okay. And so you've got all these expenses of being an S corp. And when you're doing about 30K in profit, that's when your tax savings are more than the expenses of being an S corp. And so that's kind of the tipping point there. Okay. So that's why 30,000 is kind of the spot where it makes sense to elect to become an S corp. And that's whenever you're on track to do 30K in profit for the year. Okay, so that's how that works. So let's just talk real briefly about three things that you can do to lower your taxes when it comes to owning a business. Okay, because let's say you own a business, and for 2022 you've made $100,000 in profit. That's great, that's awesome, but you're also going to owe tax on that. What if there are some things that you can do to lower those taxes? Okay, the first thing I want to talk about is paying your children. Okay, paying your children, like as if they were employees for the business. So if you have children, and honestly, this, as far as age is concerned, can get started young. Okay. So if your kids are performing a service for your business, you can pay them. Okay. And so what kinds of things would they be doing? Well, maybe they're cleaning the office or your home office. Maybe they are doing your social media. Okay. Maybe they're doing your, kids are savvy when it comes to these things. If they're old enough to be using social media and they're making posts for you and things like that, you can pay them for that. Maybe they are just doing some basic filing and administrative type work. Okay. Maybe if you've got young kids like I do, you might have seen some of my, it's been a little while, but I do I'll be holding one of my children and it'll be a little Facebook ad, sort of getting across the impression of hey, start a bookkeeping business. And, you can start kind of focusing on the things that really matter in life. So that's modeling. Okay. You can pay your kid for that. And what's really cool, and the reason this is such a game changer, is that you can pay them up to whatever the standard deduction is. And I think for 2022, it's like 12,950 or something like that. I don't do taxes anymore, so I don't know, right? But you can pay them up to that standard deduction. And since like you've got that deduction, they basically pay zero in tax. You get to write that off for your business. So it's an expense to your business. It's going to lower your profit. So if you made 100,000, but you paid your kid almost 13,000, you're now only paying taxes on 87,000. That's a big deal. And the cool thing is your child doesn't pay tax on that income either because of that standard deduction. How cool is that? That's really cool, right? So that's the first thing that you can do. You can pay your kids to work in your business. They got to be doing something legitimate. Okay, we're not just paying them for nothing. But that could be a really good way to do like lots of things. Like you can teach your kids all kinds of great lessons about financial responsibility and working and even retirement. Okay, you can take that money and then just put it into a retirement account. And you can do lots of fancy things. The kids can put it into a self-directed retirement account and start buying real estate with it. How cool is that? Isn't that cool? And so there's all these like kind of things that you can do that are just very like creative, but totally legal. And this is why, like, if this is the first time, I mean, you might have heard about paying your kids, but then rolling it over into them buying their own real estate. Like, these are things that a good tax professional, a tax planner, would be helping you out with, like identifying these opportunities. And so if it's like, if this is something you may have heard before, but you're not doing, well, that's maybe because you're not working with someone who's being as proactive as they should, and like, hey, let's get this thing set up because it can have a major impact on both the tax that you pay and then the income that your child gets. Anything that you pay and I'm talking about a good tax plan or tax professional, anything you pay them is going to be worth many times more than that. And that's why if you're doing your own taxes, that's not cool. It is a mistake in 100% of the cases. So if you think you're saving money, like if we're talking about like S corp tax returns, I mean, you could pay $1,000, $1,500, $2,000, $2,500. It really depends, especially when you talk about tax planning. But if you're like, yeah, I'd rather not pay that $2,000, I'd rather do taxes myself. It's like, I'm sorry, but that is a dumb thing to think. That is just I'm sorry, but it's dumb. Okay, because that $2,000 you're going to pay for somebody to do your tax return and do some tax planning and tell you all of these strategies and all kinds of other strategies, that $2,000 could equal $20,000 in tax savings. Okay, so if you're in this mode, I've talked about this a little bit before, this cash conservation mode. I don't want to pay $2,000 because I'll just do it myself. Like, you're not going to grow. You're not going to take advantage of these opportunities. And that kind of thinking will keep you where you're at. Okay. So I encourage you to, hey, like, approach these things with an open mind here and understand that, like, that's a great investment, paying a tax professional to do this work for you. And guess what? I don't have a referral for you. Right? I'm not pushing you to do, like, I've got nothing to sell. I'm just telling you, find somebody that's great, because that money is going to turn into more money. Okay. Same thing goes with, like, you've heard me talk about this before, the fear of, spending money on growing your business. It's going to keep your business where you're at. Okay. Use money as a tool to generate more money. Okay. Be happy to spend money. I think I just paid a $515,000 credit card bill for my business because I do tons of advertising and tons of other stuff from a marketing perspective that turns into more money. Okay. So be excited about spending money on the things that make sense. And in the context of this conversation, tax planning and a tax professional makes all the sense in the world. Okay. So paying your kids. Number 2, let's talk about something called the Augusta rule. Okay, you might have heard about the Augusta rule, but this stems from the Masters golf tournament in Augusta, Georgia, that happens every year. What happens is, that tournament, it's one of the 4 majors in golf. It draws a lot of people. And what happened is that people in the area, they started realizing, hey, I could rent out my house for people from out of town. And this was before Airbnb and all that other stuff. I can rent out my house and I can just make a bunch of money on that. Like they can pay me a bunch of money. I'll go stay in a hotel or whatever the case may be. And like some of these houses are like right on the golf course. It's really cool. And so what ended up happening, I don't know how it happened, but what ended up happening is that it's called the Augusta rule. And, but that's, I'm sure it doesn't say Augusta rule in the tax code, but, or maybe it does. I don't really know. I don't do taxes, right? But the point is that there was, the tax code now allows for businesses and I guess personal people too around the golf course, but businesses across the country. You don't have to be in Georgia. Across the country, business, it allows you as a person, to rent your house out for like 14 days, and all of that income is tax free. Okay, if you rent your house out for 14 days, okay, so if you got a house right now and you go stay in a hotel for $100 a night, and for whatever reason there's something happening that you could get a lot more than that for your house, like a business, like your business, and that's why this is so popular. Your business could rent out that house, and you don't even have to do like stay somewhere overnight, right? Like the business could rent out your house for the day, for the afternoon, and for whatever purpose it needs to. Okay, maybe you have a photo shoot you need to do. You could do like pictures for your marketing and stuff like that. Maybe you have board meetings, maybe you have team meetings, whatever the case may be. Your business can pay you personally to rent your house. You do not have to stay overnight in a hotel. Okay, but that's kind of how this all got started, right? So you can rent the business, you can rent the house out to your business. Now, how does this work? Like how do the numbers work, and where does the tax savings come in? Well, the business is going to pay you to rent the house out. Okay, so for the day. And it's got to be in what's called an arm's length transaction. In other words, your business can't just pay you $2,000 a day. Okay, you got to pay kind of whatever's normal and natural in the market. Okay, so the business pays you. That represents an expense to the business. Okay, so again, if you're making $100,000, and let's say, I don't know if it's like $200 a day, and you rent it out for 14 days throughout the year, 200 times 14 is 28, 200, $2,800. I was like $28,000, $2,800. Well, now your profit on your business is not 100,000, it's 97,200. So you're going to pay less tax. Okay, you're going to pay less tax on that. And these are just sample numbers. Okay, you're going to pay less tax on that. And then you as a person, you got that $2,800 for renting out your house, and that's tax free. That's absolutely 100% tax free. You don't have to pay tax on it. How cool is that? How absolutely phenomenal is that? So again, one of those things that people just don't know about. And there's a lot of reasons. I won't list them here, but feel free to hop online and just type in Augusta rule. And there's lots of reasons why you can rent out your house to your business. Legitimate reasons. Okay, we're not skirting any tax rules here. Okay, we're not going to end up in prison. So that's number 2. Okay, and number 3, you've probably all thought about this or heard about it, and you're like, okay, I know I can do that. Is creating like a retirement account, creating a retirement account for yourself through your business. Okay. As a business owner, you have a lot of different options when it comes to funding retirement accounts. Okay. So we've got 401ks, IRAs. I mean, the list goes on and on and on. Okay. So what happens, this is what I talked about earlier when I mentioned tax deferral. Okay, tax deferral in some cases, like in some retirement plans, like Roth IRAs, you'll pay the tax now on whatever you put into your retirement plan, and then it will grow tax free. Okay, but like in a regular, 401k, what happens is that the money goes in to a retirement account for you pre-tax, and then you pay tax when you cash in your retirement account. You pay the tax then. But the thinking then is that, hey, well, when I'm 70 years old, I won't be making a whole lot of money. And so my tax rate will be a lot lower than it is today. So I'd rather pay a lower tax rate in the future than to pay that tax today. So here's kind of how it works. And again, this is something that your business, and there's lots of different plans out there, and you got to get professional advice when it comes to this type of thing. But there are a lot of plans out there, and you want to choose the right plan that allows you to maximize your contributions to the plan. Okay. And your business, up to certain thresholds, your business can match what you put into the retirement plan. Okay. So if I put in, let's just use round numbers. If I put in $10,000 into a retirement plan and my business can match that $10,000, when my business matches that $10,000, that's again now an expense to the business. So it's a deduction. Instead of making that $100,000 in profit, my business now is only making $90,000 in profit, and I'm only paying tax on that $90,000. So I'm saving money on taxes. Okay. Plus, that money goes into my retirement account, and I get to reap all those benefits of tax deferral if you didn't choose like a Roth option. Okay. So we can defer the taxes to a time where I'm going to pay less tax. Okay. So that's really powerful. And again, there's a lot of different options out there. So that's why you want to get linked up with somebody who knows what they're doing, because especially when it comes to retirement, you could be talking about, like, over the life of this thing, you could be talking about, tens, potentially hundreds of thousands of dollars in tax savings over the life of these things. And wouldn't you rather have 50K in your pocket than to pay 50K, to the government, even though it might be spread over a period of time? Like that's our goal here. That's our goal here. So then, like I discussed a little earlier with like your children funding a retirement account, with that retirement account, depending on the retirement account you have, if it's like a self-directed account, you can now decide what you invest in. You don't have to just invest in stocks and things like that. You can invest in real estate. How cool is that? You can have real estate inside of your retirement account, making you all kinds of money and generating long-term wealth. Okay, generational wealth. So these are just three strategies. I just chose three that are popular and fun and interesting to talk about. Strategies that you can use when you have a business, whether it's a bookkeeping business or not. Okay. I'm a big fan of starting a bookkeeping business because it's easy. You just need a computer, a free copy of QuickBooks, and you can just go like learn this skill and get all kinds of clients. And it's just a thing that small business owners need. But this applies regardless of the business that you have. Okay. But a final word. If you are a business owner doing your own taxes, you're doing it wrong. I beg you. I'm pleading with you on behalf of your bank account and your family. I am pleading with you to go find a tax professional, somebody who does some tax planning, who takes a look at your situation and says, hey, here's a bunch of really cool things we can do. I've seen people like take their tax bill from, 50K and it's down to 15K. Okay. Like, the money you pay a tax person will come back to you. It will make you more money. And you know what? Isn't that what we do as bookkeepers? Our business owners pay us, and that money turns into more money for their business. All right. Because we help them grow their business. We give them information that helps them make better decisions, all that fun stuff. Okay. So, like, this is how investing and this is how business works. You should be excited to spend money. You should be just elated to spend money on things that will help you grow your business or make more money. You should be excited for that. Don't fall into this mindset of like, oh, I don't want to pay somebody, $75 to set up my website. I want to spend, 3 days or a week or more trying to figure this out on my own. Really? Really? Like, so 3 days of your time is worth more than $75? It is. Pay somebody the $75 so you can grow your business. Whether it's things like that, or tax, paying somebody who does taxes, whatever the case may be, paying for, additional training, or paying for a mentor, or, anything like that. When it comes to like making smart decisions about your business, I'm not talking about just going to do like all kinds of crazy stuff and just spending money for the sake of spending money. I'm talking about when it comes to those types of things, be excited to spend the money. Okay. Because if you're making the right moves, that money just turns into more money, and it does it very, very quickly. Okay. Very, very quickly. Because once you start generating money in your business, I like to recommend that people start using that money to start buying back their time. Now, instead of doing this function in my business, let me pay somebody else. I've got people in my business where like I started making money, and then I'm like, hey, there's all this little stuff that I don't want to do. Okay. but it's taking up a bunch of time, right? I don't want to do it. It's taking up a bunch of time. If I didn't have to spend that time, I'd be growing my business faster. I'd be focusing my time on really high value, high impact stuff. So what I paid somebody to do that stuff. Okay. Now, if I would have said, well, I don't want to pay anybody because I want to keep that money. Well, that's costing me money in the long run. That is I can't say the S word because my daughter says I can't say the S word, STUPID. But that is not a smart thing to do, to say, I don't want to pay for, I don't want to pay somebody, even if it's $20 an hour to do administrative work, but you can find VAs overseas that do administrative type of work. I don't want to pay somebody $20 an hour to do this work that's taking me a bunch of time because I just want to keep that $20 an hour. When what's really happening is that because I'm spending this time doing this $20 an hour administrative work, I'm missing out on being able to generate thousands of dollars in my business. That just doesn't make sense. So, okay, I will get off my soapbox, but please do me your Christmas gift for me. To me, can be, if you own a business, paying a tax planner, tax professional to handle this stuff for you. Okay. Don't sit down with TurboTax thinking that, like, hey, you're making a good decision. You're not. You're making a very bad decision. Okay. End of my rant. So, but I want to open your eyes to, hey, like, if you've got a business now, you've got some really great opportunities to save money on taxes. That's really the message of this video, is like, these are just 3. And I talked about S corps as well. That's 4. So these are just 4 strategies that anybody can implement, and they can have a big impact on what you pay in taxes. So if you've been thinking about starting a business, I don't care what it is. If it's bookkeeping, great. If it's underwater basket weaving, great. I don't care what it is. Okay. Follow your passion and understand that there are, beyond just making, good money and doing the work you love, there are benefits when it comes to saving money on taxes as well. Okay. So let me jump into a couple more questions. If you're watching this live, feel free to type questions into the chat, into the comments. I'll answer those as I go. If you are watching this on a replay, you can do the same thing. Okay, just type in your questions, comments, and I'll get notifications of those, and I will come back and I will answer those. Okay. Question from Henry: what are some of the things your course focuses on in obtaining new clients? We focus on 2 things. Number 1, you've got to have solid marketing messaging. Okay, what you say. Okay, you've got to change the way we talk about what we do. Okay, so most people in their profiles say, hey, I've been doing bookkeeping for 30 years. And prior to my own bookkeeping business, I ran a, Fortune 500 company, and I'm really passionate about this. And it's like, congratulations, but nobody cares. Okay. Clients don't care. They don't care about your experience. They don't care, if you're a, good person, bad person. They want you to be a good person, but they don't care how tall you are. They don't care how much experience you have. They don't care about your certifications. They don't care about how much you charge. They don't care about any of that stuff. All they care about is whether or not you can help them solve the problems in their business. That's it. And that's what we want to communicate in our marketing messaging. Okay. In my program, we help you create your marketing messaging so that when people find you out there, you stand out and that you're the one getting the call. So that's number 1. Number 2, we focus on the most effective marketing strategies, the stuff that's working right now. I know this because I'm running a bookkeeping business. I'm generating leads for both my business as well as people in my program. This is stuff we're using every day. These are the strategies that people in my program are using every day to get clients. So we just focus on the most effective marketing strategies. So that's basically what we do. All right. Truth be told says, if a client wants to know how much he made in a year along with an employee, what reports should be given? Well, how much he made in a year is a profit and loss statement. Okay. It's got their income, it's got their expenses, it's got their profit or loss. When you say with an employee, that doesn't really change anything. Okay. If they've got 1 employee or a zillion employees, there's going to be a line an expense item, expense line item that says, salaries and wages. And if he paid that employee $100,000, well, that's going to be a $100,000 expense, and that's going to lower the profit. That's it. It's a profit and loss. Okay. Pretty easy to generate out of QuickBooks. All right. I think I'm all caught up on comments. So we'll keep this one short and sweet. If you have any other ones before I jump off here real quick, feel free to type them in. But I hope that you have heard the message here. Like, there are all kinds of great reasons to start a business. Saving money on taxes is just a small one. Okay. It's a small one. But hey, if you want to start a business to pursue your passion and to get, to do fulfilling work, to make money, to support your family, to have a flexible schedule, that's all great. Saving money on taxes is the cherry on top. Okay. It's the cherry on top that can put some extra money back in your pocket. And hey, who doesn't want that? Right. So I hope you kind of got that message, along with the fact that, I'd really encourage you to work with a tax professional, someone who really knows their stuff. Okay. Because they are going to save you a lot more in tax than you're going to pay them. I got a few last minute questions coming in. I'm happy to answer those. If you've got any last minute questions, go ahead and throw those in here. And when I'm done, I will wrap things up. Hey, Miguel. Hey, Bill, just wanted to tell you thanks for your course. I'm setting up my business step by step, but your course is a huge shortcut. Thank you, Miguel. Happy to have you and appreciate the kind words. Brian. Hey, Brian. Is it possible to start now and get clients within the first week of the new year? Yeah, we've had people get clients the same week. Everybody's different, though. I don't make any promises, no guarantees. Everybody's different. This is business. If somebody said, hey, I'll make you a guarantee, I guarantee you'll do this, I'd be like, okay, I'm going to probably run in the other direction as fast as I can, because in business, there are no guarantees. But success leaves clues, okay? Success leaves clues. Jim Rohn said that. And what that means is, if we see somebody with a bookkeeping business having success, you've seen people in my program and people outside of my program have success, generate all kinds of income, getting clients. It's just bookkeeping. It's bookkeeping. Hey, I'm a bookkeeper. You need a bookkeeper. Let's do this thing. Okay. It's like, this is something that small businesses need. It's not like rocket science. It's not rocket surgery. So that being said, it's possible, but I like to say, hey, let's value quality over speed. Okay. If you're going to build $100,000 bookkeeping business, we're probably going to want to put things together the right way. And we're going to probably want to spend whatever time is necessary to get things working properly. Okay. And so I value quality, getting that foundation set for $100,000 book, or $50,000, however big you want to grow it, getting that foundation set properly and not speeding through it. When we speed through things, we don't do anything really well. So is it possible? Absolutely. And it may happen. Generally, what I see happen for people who start like a mentorship program like mine, 6 to 8 weeks, you can get trained up and start getting clients. Okay. But again, everybody's different. Everybody absorbs the material differently. Some people like to do their own thing instead of following the best practices that I outline. I can't do a whole lot if you want to go off on your own and do things. I lay out a plan that works. You've seen people have success with it. So, take those lessons and use them, and then lean on me as a mentor, and you can get to where you want to be. But yeah, absolutely, you can do that. You just got to know the most effective marketing strategies that are working to get clients. Absolutely. This I'm not going to, announce to everybody until about next Monday. But we are, if this is something you'd like to do in terms of my mentorship program, now's a really great time to do it, because as of January 9th, we're increasing the investment required by almost 3 times what it currently is. So if it's something you're interested in doing, you might want to jump in now. If it's not right for you and you don't think it's right, don't let that, encourage you to make a decision like hastily. Okay. Just kind of giving you a little preview, but we'll start sending out emails and, talking about that here coming up about Monday or Tuesday of next week. And that's just to kind of better reflect the value that people are getting out of the course. Like, people are really doing some incredible things, quitting their jobs, hitting 100K. You've seen people with the awards, building their dream house, things like that. And we're just, going to, we want the investment to better reflect what we're able to help you do. And in addition to, we have some really exciting things coming along with increased support, potential lead generation options as well, for people who join after the 9th. So just wanted to throw that out there. Okay. So since you talked about the first week of the new year, Quentin, you got your first client. Love it. When doing the cleanup, notice his taxes filed last year are all wrong. How much is the cost to get that corrected? Well, there's a lot going on here. You probably have to give me a little bit more information. If the taxes are wrong, then my first step would be to talk to the client, say, who did your taxes and where did they get the information from? If they got the information from QuickBooks and the taxes aren't wrong, QuickBooks is wrong, and we need to potentially do a cleanup depending on how wrong they are. Okay, so a couple things going on there. Okay, so that's the path I would take. If you feel like the taxes are wrong, I don't know how you're getting that information if you're not a tax person, but if that's the case, talk to your client and be like, hey, I just saw some things here that don't necessarily seem to add up. I could be wrong. I don't know the specifics of your tax situation, but you might want to just inquire about these items here. But when it comes to taxes, as bookkeepers, we don't really need to touch taxes at all. Okay, we don't really touch taxes. When we're doing a cleanup, like you're mentioning, a lot of times it's helpful to have the tax return because there's a balance sheet that many times is filed with the tax return, and that can help us do some of our cleanup work. Okay, so Quentin, that's probably how I would handle that. We've got someone over on Facebook. I can't see the name. If you are on Facebook, feel free to click the link in the video description that gives my streaming software access to see your name if you'd like to do that. Can I start approaching clients before getting ProAdvisor certification? Yes. Clients do not care about certifications. They don't care about any of that nonsense. Certifications are meaningless. They're meaningless. The only reason I say, hey, get your basic ProAdvisor certification is because that unlocks the ProAdvisor profile. Okay, you get to be listed on the Find a ProAdvisor directory. And guess what? That can be a really nice way to get clients. Okay, why not? Almost 1 million small business owners hit that website every year looking for a bookkeeper. Why not? Right? But beyond that, nobody cares about your certifications. Nobody asks about it. They're just meaningless. Okay, they're just absolutely meaningless. Okay, I've met plenty of certified ProAdvisors and certified bookkeepers that didn't know jack diddly squat. Okay, they were not very good. Alternatively, I've met lots of bookkeepers who are really good, but they didn't have any certifications. Okay, a certification does not equal competence. Okay, it just doesn't. Andrew, you are welcome. Glad you appreciated that. All right, I am all set. Hope you guys enjoyed this live stream. As you know, every Tuesday at 10 a.m. Pacific, I go live, giving you everything you need to start and grow a 6-figure bookkeeping business. If you have any questions, feel free to send my Facebook page, Booming Bookkeeping Business, a message on Facebook. Okay, send me a message on Facebook and I can get back to you if you have any other questions. And until next week, well, actually, like next week will be after Christmas. So let's wish everybody happy holidays. Okay, happy holidays to everybody out there. Stay safe, enjoy time with your family, and we'll talk to you.